Welcome back PSP Source. Today we are going to see final accounts introduction. Now let's see what is final accounts. It's simply called financial statement. A statement means profit and loss and balance sheet. As per Section 210 of Companies Act 1956, it is mandatory to submit a final accounts in every annual general meeting along with auditors and directors reports. And as per Section 211 shows clear pictures of profit and loss and balance sheet as per revised Schedule 6. A revised Schedule 6 has new formats of profit and loss and balance sheet of final accounts. And it has two parts, Part 1 and Part 2. Part 1 has balance sheet, Part 2 has profit and loss. It came into force from on or after 1st April 2011 in vertical forms. In previous schedules, they were given as horizontal format, but now they are revised. Now we'll see forms of Part 1 balance sheet. In balance sheet, there are two main categories, that is equities and liabilities and assets. Under liabilities, there are three categories, that is shareholder fund, non-current liabilities and current liabilities. Now what is shareholder fund? Which means the company can invest by its shareholder, which means company invested by its shareholder, that is share capital, reserves and surplus, money received and share warrants. Now what is non-current liabilities? Non-current liabilities means obligations doesn't need to pay within 1 year. Company doesn't need to pay their obligation within 1 year. Under non-current liabilities, long-term borrowing, deferred tax liabilities, other long-term liabilities, long-term provisions given. Now what is current liabilities? Current liabilities means obligations of a company need to pay within 1 year. Every company has some obligation. For current liabilities, that obligation should be pay or repay within 1 year. Current liabilities are short-term borrowing, trade payables, other current liabilities, short-term provisions. Under equities and liabilities, shareholder fund, non-current liabilities, current liabilities collectively called total liabilities. Here I given a note number, no need to memorize it. It depends upon sums given in your problems. Now we'll see assets. Under assets, there are two main categories, non-current asset and current asset. What is current asset? Current assets means a company can't use or convert into cash within 1 year. The benefits of such assets beyond 1 year or more than 1 year. Now what is current asset? The benefits of such assets can be utilized within 1 year. We can't enjoy more than 1 year of such assets. That is called current assets. Under non-current asset, fixed asset, non-current investment, deferred tax assets, long-term loans and advances, other non-current assets given. Under fixed asset, tangible assets, intangible assets, capital work in progress, intangible assets under development given. Under current assets, current investment, inventories, trade receivables, cash and cash equivalent, short-term loans and advances, other current asset given. Under assets, non-current assets and current asset collectively called total assets. Now shall start with in-depth working notes of assets and liabilities. Now let's start with share capital. Under share capital, issued capital, subscribed capital given, but in case any authorized capital given in your problem, then no need to take such entries. But if it is any calls in arrears given, we should deduct from it issued or subscribed capital. Okay. In case calls in arrears given, we need to deduct it from issued or subscribed capital. Next, reserves and surplus. Under reserves and surplus can be take current and previous year profit or reserves as well. Less appropriation, transfer to general reserve, final dividend, interim dividend, proposed dividend, corporate dividend tax. When we are calculating corporate dividend tax, if there is any entries given like interim and proposed dividend in a problem with the absence of corporate dividend tax, then we need to calculate corporate tax as fixed percentage of 17. If it is not, no need to bother about it. In case interim or proposed dividend given, then only we need to calculate corporate dividend tax as fixed percentage of 17. Okay. Next we shall see long-term borrowing, namely debentures, bonds, term loan from banks, public deposits. Under short-term borrowing, overdraft, deposits, loan from other parties given. Under trade payable, creditors, bills payables given. Shall see other current liabilities, interim dividend payable, dividend tax payable, outstanding interest on debentures, outstanding salary, outstanding director fees given. So I already told you, I given only oftenly asked, frequently asked working notes only. If any new entries given, I'll show it in my further videos. Okay. Next, under short-term provisions, provision for tax, proposed equity dividend, proposed preference dividend given. Under tangible assets of fixed asset, land, building, machinery, furniture and fixture, computer given. Under intangible assets, copyright, patent and other IPR, intellectual property rights given. Now, non-current investments, under non-current investment, investment in shares, investment in bonds given. Under trade payables, under trade receivables, debtors and bills receivable given. Under cash and cash equivalents, cash in hand, cash with banks, checks given. Under short-term loans and advances, advanced tax, fixed deposit and other loans and advances given. Under inventories, closing stocks, closing inventories given. So in our next video, we'll see part 1, that is profit and loss forms. I hope this video is very much useful for your studies. Thanks for watching. Keep supporting for my further videos. Thank you so much.